What's up? This is Dan Fredenberg for FigureItOut.com, and today I'm with Julianne Peterson, who issues $1 billion in loans each year. Thanks for being here today, Julie. Can you introduce yourself, please?
Oh, thank you. Yeah, my name's Julianne Peterson with Old Capital Lending. We are a premier provider of debt, mostly in multifamily, but we will do the other asset classes. And as Dan said, we do $1 billion a year. There's only 11 of us, and we've closed 5,800 loans, which in today's market, that is a lot of loans. So we are the top of our game, and you would come to us because you want execution certainty. That means we close loans.
Excellent, excellent. That's awesome. So, for the audience in this show, I talk about achievement and developing attention to detail. So, there's a recurring pattern of how does someone get to the top? Like, what are the character traits that will ensure that you'll never get there? And if possible, how do you get there even if you have no friends, no family, or cash? But first, though, you focus on commercial real estate loans. And from the top, if my buddies and I want to buy an entire apartment complex, you can make it happen. And in general, a large commercial real estate loan from a mortgage broker costs about 1% of the amount of the loan. Is that about right?
Well, that is for our services, but really you've got closing costs, right? You've got lender, legal, you have your own attorneys. There are a lot of costs. So, bottom line is you could lose your earnest money deposit first and foremost. Beyond that, there's lots and lots of fees. So you need to be aware of what the risks are, and if you're a risk taker, then have at it. It's a great place to build your wealth.
But in general, people would include like at least some of those fees, or maybe if they're with partners, an acquisition fee for themselves, they'd include it in the loan amount that they're borrowing from you. Is that correct?
Yes, that is correct. Not the closing costs. A lot of that stuff comes from the borrower directly. Yeah.
Okay, so yeah, so then you're not paying the 1% on that as well. So that makes sense.
Yeah.
So I've seen some mortgage brokers who won't help unless it's a loan for more than like $1 million or $1.5 million, because there's a lot of work involved in the underwriting, and the sweet spot for them seems to be around there. But continuing to walk through this from the start, the first question is, should people find a property before talking to you, or should they talk to you before finding a property?
Well, Dan, I would say this. You want to get educated before you go find that property, because let's face it, you could go to college and you could learn your craft and then you can go apply it. This is really, you need to educate yourself, understand the risks, understand, okay, what is the market that I want to go after, and why do I want to go after that market? Well, you want to go after that market because of the population growth, because of the job growth, and without knowing how to do that, you're throwing a dart. And again, if you're a risk taker, have at it, but you really do want to figure out your business plan. You want to understand your market. You want to build your team. I'm on your team. I'm a lender. I am 75 to 80% of the loan is coming from me. So I'm a big partner in this. But you need investors. You need to figure out, are those investors going to go to Iowa, where you've decided this is where you're going to buy? That is a critical piece. Your teammates. After you have all of that pieced together, then you go find that property. And this is not single family. You have to understand, what are my returns to my investors going to be? You could put it on you could write it all down, but there are analyzers out there that can help you understand, okay, here's my income, here's my expenses. Is this property being managed correctly? Are the fees that you're putting into your T12, into your operating statement, are those real? Maybe the guy is managing it himself. So those are not realistic numbers. So knowing that before is going to be a step towards your success in taking down these types of assets.
And so though then that's the loan as a whole. And in my outline here, I mentioned that we'll talk about agency debt in
Yeah.
particular, and also how the KP or sponsor's balance sheet is more important than others on the deal. But assuming that a person has done the education or whatnot, and they got a great deal with some dumb luck, just fell in their lap, as it almost never happens, but whatever. And they got the KP to sponsor it. Now,
Yeah.
what sort of credit rating would Mr. or Ms. Dumb Luck in this scenario need to have before it becomes a problem in the loan application process? Or is it really the KP or sponsor who is the be all and end all in the whole thing, other than
Well,
being a felon? I know being
yeah.
a felon's not good.
So listen, Dan, it is so important that you are working with people that are qualified, that have experience, and it depends on which strategy you're going for. Are you going for a recourse loan? Or are you going for this non-recourse lending? And so when you talk about what the package looks like, what your group looks like, if you're talking about a bank application, they're going to be looking for your tax returns. They're going to be looking for your performance. They're going to be looking at your credit. They're going to be looking at what kind of job you do. How have you performed to date? That is much more into your business, as I would say, than what you're going to get with agency being non-recourse. You're separated from your balance sheet. So you could buy a property every single day of the week. And your credit scores on an agency, again, you're being removed. They want to see the experience. They want this KP, this sponsor, to have the experience, the 2 years and 3 to 5 transactions. If you don't have this experience, this sponsor can help you. And if your credit score is 680, you're good on a recourse loan.
Mhm.
But keep in mind, if you're lower than that, your goal in this is to buy assets that are on your name, that you get credit for. You can certainly find that deal and you can find that sponsor. But if you don't have some of these details, you can't sign on that loan. So why are you in the game, right? You really want to have these things in place. And, if you're working on a 650, maybe take a little longer to fix your credit. If you're in bankruptcy, have a good reason what happened. We're going to take all of those into consideration.
Yeah, that's perfect. Yeah, my eyes lit up when you got to the actual numbers just because of the attention to detail thing. So it's great to know where, like when you should start to say like, oh, we really need to change what's going on. But
Mm-hmm.
when it comes to this question's a little bit more tongue in cheek. When it comes to commercial real estate deals, they're shy of a dozen roles and that you could play a part in, and some are definitely more lucrative than others. And the loan sponsor does, of course, have to have a net worth of the value of the loan or more. And the sky is the limit as far as how wealthy a limited partner might be. So they don't count in my little question for you. But
Okay.
for anybody who's listening, who's motivated purely by money and looking to get into real estate deals, they might be wondering who's drinking the 15-year-old scotch and who's drinking the 21-year-old scotch, or who's
Mm-hmm.
buying the champagne at the parties when it gets down to brass tacks. So my less subtle version of that question is, in real estate circles, commercial real estate circles, who's got the biggest boat? Is it the mortgage broker, or is it the developer or the repositioner, or what?
In terms of who's making the most money on the deal, or
Yeah. I
the
guess I get. Well, I understand that the mortgage broker is necessarily a bit more passive than the operator, for example. And the operators, they're not usually making money hand over fist, in my experience. But like I'm saying, like if you're on your friend's yacht, then which of those different roles is that person probably in? Are they on the straight money side, or are they on the raising private equity side, or who are the guys who are really rolling in it in these circles?
Well, I would say, if you're looking at people that are bringing the capital, I mean, institutional equity, these guys are bringing in lots of capital for your transaction, and they're requiring a good return. They're going to cost a little bit more. So you're going to need to make sure that the returns are there for them, whether it's pref equity and then on the takeout. But they have a lot of demands. They're making good money. Obviously, mortgage brokers, we create a lot of value for our clients because we're not just going to one bank or one institution. We're going like a carpet salesperson. We've got a lot of different things that we can offer. So if you decide you want to go bridge and the bridge doesn't, it falls through, we can pivot to another property or product. When you go direct without the assistance of a mortgage broker, you are on your own boat. You are paddling your own boat without assistance. Let me tell you, if you're going to go get a little bit of face work done, are you going to go to the cheapest guy, or are you going to go with the professional who does this on a regular basis? You're going to look for the guy who delivers, who does that work every day. And that's where, we bring a lot of value to the transaction.
Yeah, I like that because it shows that you're not just a one and done sort of service. And that's something I've been running into because, like I got into commercial real estate coming from tech and my tech agency, funnelfixing.com. And that's one of the things that I'll run into. Some clients, they'll want to do a one and done sort of thing. But if you're actually going to trust a large or scaling business, you really have to have that assurance of having somebody who's going to be there and is going to find solutions instead of saying like, I don't know, it's your problem, right?
Yeah. Well,
Yeah.
and again, these are your teammates. So we're going to help assist you, whether it is to bring a sponsor, to bring an attorney, to bring, investors to your transaction. We provide a lot of value. Now, not every mortgage broker is created equally. At Old Capital, we are very much into educating our investors. We want to make sure that you can't do without Old Capital. You can't do without Julie on your team because we bring so much value. You wouldn't want to go any other place. And so, I do Zoom at 8, which is on Tuesday nights. That is creating relationships. That's creating content so that you can become a better investor. We do the Old Capital Conference where many of the big heavy hitters, brokers, investors are going to, because we want to make sure that you're with a leader in this industry.
Mhm.
We do the podcast, our Old Capital podcast. I mean, we've been around 5 years on the podcast, 6,500 downloads. People look to us for knowledge and expertise. So we're putting out great content and we deliver.
Yeah, that's amazing. Now,
Mm-hmm.
one thing that people might be wondering though is like if you're looking at it as a system, and that's something that's a recurring theme in figureitout.com is looking at the system as a system. And one question that might pop into somebody's head is like, okay, so you can source, the 80%, 65%, 75%, whatever it is, the lion's share of the purchase funds for
Right.
these great big assets. But then the question would be, that might come up in their minds is why do you need little guys to bring you deals in the first place? Like what's in it for you instead of just like doing all of it in house, I guess I'm asking.
An LP position, honestly, Dan, is a great place to be because you don't have to worry about the tenants. You don't have to worry about, the roof. You have that all structured out. You give somebody your money, somebody that has a track record, by the way. You're just not putting out, this is risky business. You're finding somebody that has the education, that has a proven track record. Those are the people you want to search out.
Mhm.
When you're starting out, I always recommend taking an LP position, because if you're getting into this and you're thinking, hey, I want to be in charge. I was in charge on my single family, and I want to be in charge on my own projects that take a lot more. You better know how a professional syndicator is communicating. What are they telling their investors? Are they leaving out information? Are they taking advantage of the situation? Have they run into problems, and how are they communicating that? So that's where I always say to start is be an LP. You know what? You can do the education programs, and there's nothing wrong with those education programs. You can put out 50,000. It gets you into the game, right? That's certainly a way to do it. Or you can step back and say, I'm going to try this on my own. I'm going to invest in somebody's deal. Here's 50,000. You're going to take that. In the meantime, you're going to build your network, meet more people, figure out who's on your team, and then become the GP. And in that time frame, you can also gather some more capital, because as a GP on that management team, we're going to look for 10% of the capital coming from the GP. Those are the people that are flying the plane. I need the captain and the second and the first team members in the front of the plane, right? And all the LPs are in the back. And they're we're serving them, but you have to have 10% coming from that group. Now we hear use other people's money. And this is not a fast game. This is a long game. And so start today figuring out, what is your strategy? Where do I want to start my commercial profession today? Where do I need to start? And it is really reaching out to folks like me, to folks that are doing it day to day, and get to know them. Find a presence that you have on LinkedIn, on Facebook, on Instagram. Become somebody that people recognize. Joe Blow, hey, he does a great job. He's in, tech, and he's moving over to commercial multifamily, and this is what he can offer. And start liking and making comments, and people will be drawn to you for, reaching out, and set some time aside. This can be done part-time. It can be, but you need to ask yourself, where am I going? What do I want to do? If I want to continue to do single family, have at it. I want to do multifamily, do the LP first. That's my recommendation.
Yeah, that makes loads of sense. And my background is in scaling and software and whatnot. And so I'm constantly looking for anything where it's like, okay, what actually takes time? What actually takes somebody sitting down and putting effort into it? Because if it's just a few seconds, it's like, well, multiply that by 10,000 times and you've got a lot of time. So that's exactly what I'm looking for. And it appears that my role has to be the one who's making sure that the LPs are taken care of, because it's too much to absorb if you're busy doing anything else, quite frankly. There's a lot of nuance and subtlety, but
it is so important. Whatever your role is, whether you're a capital raiser, or you're the deal finder, or you're the asset manager, or you're managing the deal flow, every single one of those roles is important to the transaction.
When we were planning this interview, we were talking about something that from a team perspective, it just automatically smells like a bad idea. And what I'm talking about is the role of sponsors if they're not actually going to be active. Do you want to take that?
I would love to, because listen, there are people that are putting in as a sponsor and saying, hey, you pay me $40,000. And you're like, cool, I got a sponsor for $40,000. But the risk that sponsor takes, and that's great, and they can go away, but here's the deal. that sponsor is putting themselves at risk. And if they've decided this is what they do for a life, this is their job, this is their love, their passion, you as a GP have an obligation to that GP, that sponsor, that KP, to deliver. And some of these people that these sponsors are jumping on the bandwagon have no idea what they're doing. And what happens is they lose sight. The sponsor loses sight of this investment because he's down the road with his 40,000. And Fannie and Freddie, our agency lenders, they do a drive-by and they call up Mr. Sponsor and say, hey, how you doing? Oh, I'm good. What's going on? Hey, have you been by ABC Apartments? Yeah. Wow, what's going on? Oh, well, let me show you the pictures and show them what has happened since you bought this property, whether it is CapEx expenses that you were supposed to have done or really keeping up with garbage, cars on blocks, whatever it is. And this guy gets that phone call, gets the email, and he says, sorry, you're done. We are not going to be giving you any more money. We're done. And until you fix this, you're shut down. You go on this thing called the A checklist. And that can cost that sponsor his relationship. He might as well go back to fintech or whatever your project management company that you came from to get into being a sponsor, because this is your greatest relationship, and now you've put yourself at risk and you've been shut down. So, these sponsors, making sure that they've got a good track record. I have been on transactions and we got to the application, we got through almost to the end and found out that, oops, this sponsor has this deal over here that has nothing to do with us, and they are not transacting properly. And my guys got shut down. They lost the deal because of the sponsor. So you do run the risk. You got to do your due diligence on these people that you're running into making a relationship with. Again, this is a long game. You don't just call up and somebody and say, let's get married. You do the dance, you do the dating, you do the hand holding, you do the shabam, and you figure out, are we going to work? Are we going to have our value, vision, and mission together? And can we execute based on what we've got as a collective whole?
Yeah, that's a lot to think of, and like anybody who's out there who's doing any of those similar practices, I'm sure they got to be quaking in their boots. But thank you so much for coming out today, Julie. And
You're
we met
welcome.
through LinkedIn and through some of the meetups. But what's the best way for people to reach out to you?
Yeah, thanks. So again, social media, I'm across the board, Julianne Peterson, Zoom at 8, check that out, Facebook. I've got my information there, Zoom at 8. And then feel free to send me an email at jpeterson@oldcapitallending.com or call me up, 972-833-2774. Love to hear from you. Really appreciate the time that you gave me today, and look forward to visiting with you in the future.
Sounds good. And don't forget, it's Ann with an E, Julie Ann Peterson.
I spent a lot of money for that E, so yes.
That's funny.